Dividend stocks. According to Investopedia, dividends are the distribution of corporate profits to eligible shareholders. Most commonly, dividends are issued to investors in the form of cash, and depending on the company, the investors can either get monthly, quarterly, or annual dividends. Now, it should be noted that the maximum times it is only the companies who make the most profits who decide to issue frequent dividends to shareholders. So, if you pick a company that has a lot of potential for growth and that is also making profits every year, and then you buy the company's stock, chances are you will be paid dividends too. Normally, companies in healthcare, utilities, and financial establishments are the ones who pay out dividends regularly. The common aspect between all these three sectors is that they all have an immense potential for exponential growth in the future, and even in current times, they are making profits. If you want to earn passive income or even a side income aside from your job, you can research more into these industries and then pick out stocks that best fit your portfolio. In this video, we will be covering 3 stocks, which fall into each of the 3 different categories of sectors who pay out regular dividends. Let's head straight to our stocks now. Stock number 1, Johnson & Johnson. Surely you must have heard about this company. Johnson & Johnson is a healthcare company. You must have seen their products on one of the shelves of your local supermarket. Be it skincare products for babies or adults, Johnson & Johnson has it all. A quick trip down memory lane? I remember my mom used to powder me with the Johnson & Johnson baby powder after a nice bath. Drop a comment down below if you ever used Johnson & Johnson products when you were a baby. So, coming back to the video now. Not only skincare or self-care products, the company is also involved in the production of the COVID vaccine. As you know, the world is still not COVID-free yet, and the demand for vaccines is increasing day by day. If you were able to get vaccinated, you should be grateful because not every country is able to make vaccines accessible to its public. Long story short, the healthcare industry will only ever be a growing industry. And along with it, the massive growth of the Johnson & Johnson company is also very likely. So, this is why, in my opinion, investing in the Johnson & Johnson company will be very profitable for investors. Stock number 2, Clearway Energy. Clearway is one of the largest developers and operators of clean energy in the United States. And, quick fact, renewable energy is the future. With problems presented by climate change, gradually, renewable energy is bound to take over fossil fuels. Now, this change will not happen in a day nor in a year. This might take years, and this is why if you are more of a growth investor, Clearway Energy is a company you might want to look into. According to Nasdaq, the company currently boasts Clearway Energy stands out in today's low-yield environment. The clean power producer currently boasts a dividend yield of 4.3%, significantly higher than the 1.3% yield on stocks in the S&P 500. Appealing figures, eh? This is only the beginning. Since renewable energy is still in its baby steps, in 10 years or so, you can expect to get even better dividend yields that the company is currently issuing to shareholders. It is also worth mentioning that the clean energy sources that the company deals with are both solar and wind energy. So, if you don't know which specific type of renewable energy company you want to get into, Clearway Energy provides you with the perfect solution. After all this information, I now hope you understand why Clearway Energy can be beneficial for your investment portfolio and your wallet. Stock number 3, American Express. American Express falls into the financial category that we previously mentioned at the start of the video. Let's take a look at the market summary for American Express to learn about why this credit card company can prove to be a worthwhile investment. As can be seen on the chart, the stock has regained momentum after a major decline in 2020. This decline can be attributed to the COVID-19 pandemic because, just as banks suffered terrible losses when the pandemic hit, the American Express company suffered too. Because, unlike other credit cards such as Visa, American Express acts as its own bank. Nevertheless, the company has recovered well since. As you can see, we are still not pandemic free, and the credit card company is still doing well. I would say that the company is performing better than ever. It is also important to remember that the American Express company focuses mostly on consumers who have high income thresholds, and thus, even if the economy becomes unstable, it will not lose its money, as the credit card holders will have the ability to pay their money back. So, this is why the American Express company grabbed a spot in the top 3 dividend-paying stocks for 2022 and beyond. As a final note, do not go buying these stocks blindly without doing your own due diligence to see if indeed you would like to invest in these stocks or not. To help you with this, Warren Buffett has an investment checklist that he uses till date as a guide before making any investments. Click on the video which should appear at the end to know more